What's good, YouTube? It's Coding Cash. I'm done. What's good, YouTube? It's Coding Cash. I'm done. And this is part 2 of Backtest intro. We back. Yes, sir. Let's start off with the prayer. Dear Heavenly Father, I'd like to first thank you for today. Whether something good happened or something bad, I give you my gratitude. I ask of you in this prayer to give me the strength and discipline to attack this moment of work with effectiveness and efficiency towards my goals. Amen. Amen. Let's get straight to it. Hey, so what did we leave off at last time? Let me see if I can remember. So the steps. Okay. So we are getting you a detailed look at of what things would actually look like. So we did do last time we talked about the example. The example was whenever the 10 period simple moving average would move above the 20 period moving average, we go long, we buy. But if it would reverse, if the 10 period simple moving average would go below the 20 period moving average, we short. That's the indicator that we are coding right now. And as you can tell, this is an example indicator. We're not looking at if it works or not. We're trying to figure out what it looks like. Don't worry about creating the perfect thing right now. That comes after experience and a lot of back testing, a lot of figuring out stuff. We're trying to figure out how to back test. We gotta walk before we run. So as you see right here, the blue is a 10 moving average, and the purple is the 20 period moving average. So the 10 period crosses below the 20 period moving average. So the indicator would say that we sell at this point. So as you can tell, it does move with the trade. So that would mean that we will be profitable in this trade right here. And then it says once it crosses the 20 period moving average again, first we take profit at that point. So we're not really going to capitalize on this full move right here, because once it goes up, that's where we're going to be taking profit. So really, whenever it crosses again, this is instance that we're going to be taking profit at. We're not taking profit out here. It would be nice if we take profit right here. This would be a different type of code. This would be a different indicator. But the indicator, the example that they're giving us, it stops right here. So that being said, let's read along. As y'all remember, the CFD is contract for difference. Basically, you're taking the difference of a bet that you make. Let's say you bet someone that the bike, let's use the example again. You bet someone that the bike is going to be $50 tomorrow when it is $25 today. That being said, if you won, it would be you would make $25 just because 50, the end minus the beginning, 50 minus 25 equals 25. But if it goes to zero, if tomorrow, instead of it being 25, it's free, it will be 0 minus 25. That's negative 25. Now you're negative 25 in debt. If it doesn't change, if it's 25 today and 25 tomorrow, it's 0. You're not losing any money. So just like a definition that you want to learn, because at the end, this is a extreme long form. So the whole point of everything, we're trying to figure out everything. No stone unturned. We're trying to learn every terminology, every definition that we come across. Because at the end of the day, I'm a beginner with y'all, and there's a lot of words that I just don't know, just because lack of information. But we're going to change that, because instead of having lack of information, we're going to gain information every single time we come across something. So now we can get into the meats of everything. We can get into the three hitters: snippet, output, and plots. As you can see, snippet is basically the code that we're going to type. Output is going to be what this code produces. And the plots is going to be a visual indicator of this, the output. So this code is really just giving you a 2-for-1 special. We all love a 2-for-1. We record most significant statistics this simple system produces on our data, and we show a plot for further manual inspection. Okay, let's go further down. Is not smarter than everyone else. He merely has his ignorance better organized. There you have it. He said it best. Okay. So now we're just going to take a code. Okay. We're going to open the temp that we have open. Just make sure you need to watch these in order. If you don't, some things will be confusing, but I'm gonna do my best to make everything independent from each other, so it doesn't feel like you have to go through hours upon hours upon hours, because that can get a little discouraging. Basically, in the first video, we made just a blank folder. It's nothing serious. Just make a blank folder. Just right click somewhere and click new folder. That's it. That's what this is. So you don't need to worry about this part. Trust me. Like I said in the last video, you don't need to worry about that part. So currently, we're just going to open up this folder. So since it's called snippet, we're going to call it snippet. But when you're working with Backtesting.py, you have to make a Python file. Python, long story short, let me update this. Long story short, Python is a coding language. Python is really just a coding language. And we're going to be using that language to code everything. all the way from backtesting to even deploying on live market. Here. So okay. So here's what I like to do. Let's have some fun with this. What you need to do is do your best not to copy and paste. Everything that you write in code, you have to hand write. You have to hand type it yourself. You cannot copy and paste anything. The only things that you can copy paste is what you already typed up. So let's say you have Tim right here, time right here, and like a couple lines later, you have to say time again. Then you can copy and paste and put it here. Stuff like that. So right now, we're gonna get straight to it. So we're gonna take this as steps. Learning steps. So first, step 1 is to write out the example. Then step 2, analyze the example line by line. You want to figure out everything that you're typing after you already typed it. That's the best way to do it. And 3, next step. So let's get straight to it. How y'all doing today? Because honestly, today's been ups and downs, but this is my favorite part of the day. Like actually working on algorithm trading. This is my favorite part of the day. I just got done with my day job and then I went straight to the gym and I just feel a whole sense of enjoyment right now. I feel genuinely excited to teach y'all this and learn with y'all. Because every day I do this, every day I actually take this action, I get better. And while I get better, hopefully y'all get better. There you go. All right, let me see if I. This will be part two. So part one, we are going to run it. Make sure it works. Because let's not analyze something before knowing it works. It's like test driving a car. You gotta make sure it works before you buy it. You know what I'm saying? So let's figure this out. Okay. There you go. And does it produce? Okay, so that is bad. Okay. So it's a good thing that we test drove this. So now we need to figure out what the problem is. You don't need to worry about this. Okay. Write this down. Strategy. So basically, what I'm trying to figure out is why I'm not getting this output. That's the problem that I'm facing right now. Copy path. What could the issue be? Let's look it up. Let's actually check. One second. Let me see something real quick. Oh. Okay. 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 So this is something that they're not telling y'all. That's the thing. That's why you need to watch my videos. That's why you need to watch my videos. I understand it now. I was just looking back at my old code, some code that I've been working on prior to this. So for you to get this output, because at the end of you see it right here on the website, but you also want to see it for yourself. You have to print the output. You have to have the print function on it. There we go. And look at that. You feel me? You feel me? You feel me? God good all the time. Just okay. We here, locked in, we tunnel vision. Okay. So we got this to work. Okay. Let's break this down. First and foremost, let's break down the easy three hitters. Okay. This is run the back test on this one. So I apologize. Run the back test. That's what this is. BT, this variable is calling a function run. That houses this class. As I hover, you want to see run the backtest, return pd.series with results of statistics. Keyword arguments are interpreted as strategy parameters. And a whole bunch of this stuff, but we'll get to this later. So the terminology of this is called a method. This run function is a method. So take away function out of your dictionary. This is a method. Def is a method. Okay. Def method. So this variable, we're calling a method from this variable. So let's write it down. Output equals the BT variable equals a run method from BT variable. BT variable. There we go. The reason why I'm writing it this way is because I want y'all to understand the language as well. It's one thing to break it down all the way to infant level understanding, but I want y'all to understand how people will talk when it comes to this space. Obviously, you see when you hover, people are going to use the correct terminology that's written down, and that's method. So you have to call it what it is. Output equals a run method from the BT variable. This is a run method from the BT variable. As you can see, this BT equals backtest, and it is a variable. Backtest is this. This is a built-in class. As you can tell, this is the type of word it is. It is a class word, and and the parameters, as you can tell, this is called parameters. Quotation, parentheses. Anything in parentheses in front of the main word, whether it's a class or a method, is parameters. If there's nothing in the parameters, like it's just blank like this, there's no parameters. So just hovering over this, you're going to see data, data frame. So basically, what chart are we going to look at? Are we going to look at Tesla? Are we going to look at Apple? In this case, we're looking at Google. This is Google. You know how I know this is Google? I'm going to break this down further to you. Let's go deeper into the documentation. If push comes to shove, always look at the documentation. Never assume that you know everything. That's how people fail and fall on their face. So they're saying it right now. So this is a global variable. It can be differentiated by saying var. So Google is a data frame of the daily NASDAQ Google stock price data from 2004 to 2013. So let's write that down as well. Google is the Google stock name. Is a global variable that resembles the actual that resembles the data, the real data from 2024. What did they say to 2013? Google is a global variable. That resembles the real data from 2004 to 2013. Google is a global variable, which that's what it is, that resembles the real data from 2004 to 2013. That's good wording right there. I like that. Okay. Let's break this down even more. Hover over this, as you can see, variable. This is a variable right here. Okay. So next one, SMA cross strategy. Basically, mind you, this is a built-in class inside Backtesting.py, the library. This is built in. So since it's built in, we gotta follow the parameter requirements. And this is the parameter requirements. And it requires a strategy at the second parameter. And the strategy should be in place of class. We're gonna get to what this strategy entails, but the type has to be a class. Okay, next one. What are these called? Let's look it up. This Google doesn't help. Yeah. So it's called asterisk. Okay. Okay, I know what that was. That's slipped my mind, I guess. So asterisks usually don't mean nothing. It's just filler. Right. I had to think back. It does mean something, but in this sense, it doesn't mean anything. Next one, cash. Cash will be float just because we might have point zero zero like point 50 cents in, like we might have 50 cents. So that's why they decide to make it a float just so it can be flexible. So it is 10,000. As you see, the reason why we're giving ourselves 10,000 is because that is what this example does. We are only going based off of the example. The reason for everything is all in documentation. So don't think that these are just random words. No, these are words from the example. Point to broker commission. That's the commission right there. 0.002 because 0.002 equals 0.2%. So 2%. Oh, it's 0.2. There you go. So exclusive orders. Okay. So one thing about having built-in functions, if it's already filtered with something, then you could just leave it alone if you don't need to. Okay. The crazy thing is, why not? Let's break this down. Data is a PD. That data frame from open, high, low, close, and optional volume. If any columns are missing, set them to what you have available. As you see, if any column is missing, set them to what you have available. So just equal them to each other. The passing data frame can contain additional columns that can be used by the strategy sentiment info. Data frame index can be either a date time index timestamp or a monotonic range index sequence of periods. Strategy is a backtesting strategy. Subclass non-instant. Cash is initial cash to start with. Commission is the commission rate. If your broker commission is 1% of trade value, set commission to 0.01. Note, if you wish to account for a bid and ask spread, you can approximate doing so by increasing the commission. Set it to 0.0002 for commission less forex trades, where the average speed is roughly 0.2% of asking price. Basically, they're talking a whole bunch, but to sum up what commission is what the broker asks to do the trades that you want him to do or her do. Every broker's going to have a different trade, but whenever you register with a broker and everything along those lines, they're going to tell you what percent it does, and you can tailor it based off of the platform that you're going to use. But right now, we're going to use 0.002. Margin. Margin is required margin ratio of a leveraged account. No difference is made between initial and maintenance margins. To run the backtest using a 50-to-1 leverage that your broker allows set margin to 0.02. I don't really understand this. So let's go check the Okay. How you're trying to buy a stock that costs $100 per share. Normally you need $100 in cash to buy one share. But with margin trading, you don't need the full 100. You only need a fraction of that amount, which is called the margin requirement. So if your broker allows you to borrow money and say that you only need 50% of total price, known as 50% margin, then you could buy that $100 stock with only $50 for your own money. The broker lends you the other 50. Oh, so that's what margin is. Basically, the requirement, your capital requirement to get a certain amount of money. And good margins, like you're at a car dealership, you want to buy a car worth 20,000, but you only have 5,000. The dealer, your broker says no problem, you can put down 5,000. I'll loan you the rest. So you buy the car for 20,000, using your 5,000, and the dealer gives you the 15,000. Your 5,000 is the margin. You still own the car, but the dealership has a claim on it until you pay them back. In this case, you're leveraging the broker's money to buy something you can't afford on your own. Just like with stocks, if the value of the car goes up, you get to keep the profits. But if it goes down, you also bear the loss. Let's say allows some margins. Without margins, you could buy 1,000. With margins, you only need 500 of the money. 500, now you trade 1,000. Pretty cool. Obviously, if you're taking out a loan, they're going to require you to pay them back, and if you don't, then you are in dear trouble because you have to pay them. You have to find a way to pay them back. You want to find, maybe you want to get some money out of your own pockets to pay them back, but by any means you gotta pay them back, or they're going to tax you. They're going to tax you crazy. Okay, that makes sense. If trade on close is true, Market orders will be filled with respect to the current bar's closing price instead of the next bar's open. Okay, let's. Okay. Okay. Trade on close is a type of order that tells your broker to buy or sell a stock at the closing price of the trading day, not at the price when you place the order. Not at the price when you place the order. Essentially, you're waiting for the market to close and you're willing to accept the price at that moment. What's the closing price? The close is the last price that a stock or asset trades at before the market shuts down for the day. Okay. Okay. When trade on close equals true in backtesting.py, it means that your market orders won't be filled based on the open price of the next bar or next candlestick, but rather on the closing price of the current bar. Okay. So, trade on close is buy sell of stock when your candlestick size bar is closed instead of when the next one opens. So to break this down, it's like this. If we're on this, let's say we're on this candlestick, right? Let's go 1 minute. Let's say we're on this candlestick. Well, we are on this candlestick. If trade on close is true, the trade's going to wait until it's finished. Let's wait until it's finished. So boom. It's going to put a trade in, whether it's buy or sell, into this point right here, instead of right here, the opening of the next one. If it was false, they would put your trade into right here at the top. So that makes sense. Okay, so let's see. If you're placing an order, say a 1 minute chart, your order would typically be filled at the price of the next open of the next candlestick after the order was placed. For example, if you place a market order at 10:30 a.m., the order might be filled at 10:31 a.m. open. With it being true, if you're using trade.close equals true, any market order you place are filled based on the closing price of the current bar. Note, not the open of the next bar. So if you're placing an order at 10:30 a.m., instead of your order being filled at 10:31 a.m., it will be filled at 10:30 close. Okay, so I said, why is this important? Realistic execution. When you backtest, you want to simulate how your strategy would perform in real time. The trade on close setting allows you to more realistically model the situation where you place an order, but you're waiting for the current candle or bar to close before you make the trade, avoiding fills at the open mistake in real markets. If you place an order before a bar closes, the price you'll get in the close price of the bar won't be the price at the open. That's using makes it more accurate. So we're gonna customize a little more. We want accuracy. Let's see how this changes. Everybody knows what win rate is. So remember this number, 54,255. Boom. There we go. Okay. Set to true. for accuracy. Okay, let's say it is 54,225. Let's see. Save. Now it's 52,175. 127. So it's less now. But it's accurate. It's more accurate, so we're going to take it. Okay. The more you know. Okay, what's the next one? Hedging. If hedging is true, allow trades in both directions simultaneously. So that's it falls the opposite facing order first closes existing trade in first in, first out. And can you explain hedging for me? This is what testing PY says about hedging. Can you simple one In the context of trading, hedging is like insuring your position against potential losers. It involves taking opposite positions to protect yourself from risk. I know that. Imagine you're a farmer who grows wheat. You're concerned that the price of wheat might drop by the time you harvest it, so you enter into a futures contract to sell your wheat at a fixed price, even though you haven't harvested it yet. This way, if the price of wheat drops, your loss from selling the wheat at a lower price will be offset by the gain from the contract. Let's bring this back to let's keep reading. Hedging allows you to open both buy and sell positions in the same asset at the same time. Effectively offsetting potential losses on a side with gain from the other side. Okay. So hedging is betting on both sides at the same time. So let's say you place a bet right here, but when you're hedging, you place two at the exact same time. So once you click it, you have one that's saying, oh, it's going to increase, and you have another one that's saying, oh, it's going to decrease, it's going to sell. And you take profit, you take profit at the exact same time. So one's right here, one set for it's going to reach this level, another one set for it's going to reach this level. Whenever you win, whether it goes up instead of going down, your down is going to lose. So you're subtracting the losing bet with the gaining bet, and you're going to see the difference. That's what it is. Winner bet minus loser bet. That's basically what it is. Equals hedged earn. if you're holding position, say you're long on a stock, you can't open a short position unless you close your existing position. Oh, I understand it now. So instead of it being one after the other, it is, you can do both of these at the same time to accommodate the trade. With hedging, you can hold both buy or sell position at the same time, which balances the risk of price movement in each direction. Okay, so true, you can have both simultaneously, so you can hold both positions at once. If you want to place a trade that goes on the opposite side, you gotta close that position. Okay. So you do have to set this to false, just because that's the example. The example says that once the 10 crosses above the 20 SMA, you buy. Whenever the 10 SMA goes below the 20 SMA, you sell. So it doesn't really have, the example that doesn't really have any room for hedging. Okay, so sorry, set the false. Okay. If don't care, maybe it'll make sense whenever we come across it. Okay, now let's do executive orders. So we set that to true for some reason. Let's see why it's true. If executive orders is true, each new order auto closes the previous trade position. Make it at most a single trade, long or short, in effect at each time. Okay, so basically, like I said, like it has to be one or the other. Okay, so that's what it's been. That makes sense in the example, because once it crosses lines, it's buy. Once it crosses in a different way, it's sell. Once it even crosses, it's changing. Like it's closing the trade once it crosses with anything. So okay, that's dope. That's dope. That's real cool. So now let's tackle these bottom two right here. So this is in charge. Print function to output the stats. Basically what this is. Okay. Very unfortunate. Alright, plot. Generates an HTML file that outputs visual representation of the bot onto it. Because at the end of the day, this is a bot. This is a simple bot that we coded. This is a simple bot. Okay. Now let's get to the strategy. And you class. Sure, I'll break it down line by line as simple as possible, explaining each part so it's easy to understand even for a fifth grader. I says, you feel me? If you understand that reference, leave a comment in the description and a like. What is you talking about? Are you smarter than a fifth grader? I hope so. Let's imagine you're learning about classes in Python, which are like blueprints for creating objects that you can work with. Okay, so let's write that down. So classes are like blueprints for creating objects that you can work with. Blueprints for creating objects that you can work with. That makes sense. You're creating a blueprint for an item. You're you're creating the blueprint. Basically, they're saying you're creating what it does. Like what's its use? What does it do? What's its functionality? That's what you're doing when you're making a class. Classes are that gives it a task. A class, a task. Like a mom trying to give you chores. Here's an example. There's an example class to break down. Oh, I didn't even put in my code. The goal of this class is to implement a simple moving average crossover strategy. Okay. identification of simple indicators crossing over each other. So this is a type of trading strategy where the goal is to buy when a shorter term moving average crosses above a longer term moving average, and sell when the opposite happens. Okay. Class, what this means, you're defining a new class called SMA cross, which inherits from a base class called strategy. Oh, okay. I don't know. Right now. And here's from this class is likely a special class provided by the backtesting library that has built-in methods to manage trades data. SMA cross is a specific trading strategy that you will use to make buy or sell decisions. Which of it likely like this. You're building a custom trading plan SMA cross by extending a pre-made blueprint like trading strategy. It's like using a recipe but adding your own ingredients. So this is what it means by inheriting. A trading strategy based class, extend this class and override methods, backtesting strategy in it, and backtesting strategy next to define your own strategy. So this is initial and this is next. Initial and next. And 1, 10, and 2, 20. What this means, you're setting two numbers, and 1 equals 10, representing the short-term moving average period. Okay. Just copy and paste this. When it comes to code, when it comes to things that are not code, you can just copy and paste it. This is not code, this is just notes. Okay. So they basically just explain simple moving average. It's basically how many data points the long-term average will cover. So it just takes the average of every single, of 20 candlesticks, 20 of these, and creates a line based off of the numbers. Price to calculate short-term chart. Which means this initialized function. It runs once when the strategy is created, and is used to set up everything your strategy needs before it starts making trades. Self refers to the current instance of the class, like saying this particular trade strategy that you're creating. Think of it like this. This is like the setup part of your strategy where you decide which tools or calculations you'll use in the future. Okay. Initialize trade. Initialize the bots. Okay. Close equals self-data close. This means you're getting the closing price from your trading data. This will be the price of the asset at the end of each time period, like the end of each day, each hour, each minute. Which of it, like this, you have a list of prices that represent how the price of something changes throughout the day. You're especially looking at the closing price of each period to make your trading decision. Okay. One is this identifies the 10 period. This identifies the 20 period. This resembles what this means. You're creating a short-term simple moving average with a period 10. The self-I function is likely a built-in method from the backtesting library that calculates indicators like I. Oh, so I equals indicator. So this is an indicator. Yeah, so it indicates. Yeah. Stuff. Okay. And a function that calculates a simple moving average of a certain number of closing prices. Okay. So they have a built-in simple moving average already. There's a list of closing prices. So basically, it won't, whenever it's accounting for the moving averages, the amount of candlesticks based off of the moving average, it's not going to account for the current one that's still making a trade. It's going to account for the ones that are already done. Oh, that's right. Okay. Self.N1 is the number of period 10 that you want the short-term estimated cover. Think of it like this: your time strategy. I want to keep track of the average closing price of the last 10 periods. So it's doing the same thing for the 20. Okay. What this means, this is a special function in Backtesting.py that runs each next bar or next data point, like the next day. So basically the current one, the ones that's still being worked in, that's what the def next is for. It's also a method as well. Like I said, current size of strategy should be buy. So I still really do nothing. It's on the strategy. So what should I do next? I need to buy, could I sell, or just wait based off the most recent data. If crossover self.SMA. So crossover, what this means, the function cross self one, estimate one, and estimate two checks that the short term estimate one has crossed over the long term estimate. So basically, the short term, this is the 10. Let's say this is the 10, and this is the the, the long. Like this is the 10. This is the 20. You feel me? If the 10 is crossing over the other line, that's what crossing over means. Crossing over, because you're going over that line. You're going over it. You're buying. If now the 20 is going right here, this is the 10 now. So if the 20 is going over the 10, guess what? Now you sell, because the 20, because now the short one is below the 20. One line crosses over the other line, which is a sign that I do good time to sell. Thinking that this is taking it the 10 is not going over. If it is, then you sell. This is buying. Mine was going on. Else. Okay. Makes sense. Basically, what we said. This is exactly what we read. That's a crazy thing. Like, once we break it down above the slower 20 moving average, the 10, over the 20. Honestly, I feel it would be better if I just write. I'll make it a lot more simple. Awesome. Let's make it simpler. You feel me? There you go. That makes more sense. That's more clear. Whoa. We tackled the snippet. We explained it. We wrote down some notes. Let's make this bigger. We wrote down some notes. So in the next video, we are going to tackle the outputs right here. We're going to tackle those. This is the juicy stuff right here, just because there's a whole bunch of words that we don't know. Just a whole bunch of words that I don't even know. Like calorimeter ratio. I don't even know if I pronounced that right. You know what I'm saying? So we're going to get into it in the next video. But right now, thank you for having me. Thank you for walking with me. It was an incredible day. And I hope y'all got a whole bunch of information from my explanations. Because we're learning together. Like, I'm learning how to explain just as much as y'all are learning how to trade. So we're learning together. We're walking together. So I'll see y'all in the next video.